Quite an opening to 2023, ran right up to that 55 SMA and pulled straight back. These levels were clearly marked and they worked perfectly. So you can see how all these previous close all of a sudden are becoming rejection points, supports and resistances. You can see how they're flipping as they walk us down. Now let's drill into today. So we have the rally up, which everyone usually expects the first 5 days. We did think that we were going to sell down. That's exactly what we did. The trigger was the ISM manufacturing, which we're going to get to in a moment. But you can just see how we came down, rallied back, and now we were trying to hold that 380.24 all day, and then finally just cracked it, came back down, tested. Now we didn't take out the lows yet. We did not get there, but we are trying to hold in here. We are trying to hold. Whether or not we do remains to be seen. If you look at this very simply on a daily chart, there's very little that you're going to look at this and feel warm and fuzzy. So you're really trapped in here. And quite frankly, since we had the long-legged doji, we really haven't broken out of that. So you really have not made a decision, but if you look at this, you still have that bear flag. We still have the MACD under the 0 line. If we look at the weekly, all we're doing is just following the pattern. We're just following the upper channel line, clone these, and you can see the channel. Inside that channel, we're forming a bear flag. We would like to watch 387.41 and see how it acts there. So today we got the first portion of the economic data for ISM manufacturing and non-manufacturing that's going to come out. And the first reading was right in line, and this was at 9:45. Now, the significance of this is when we have a decline, this is a precursor to how S&P earnings are going to go. In other words, as the ISM PMI drops, so does S&P earnings. Usually it's about a 6-month lag. The market was looking for this morning was possibly a higher number, which could mean that maybe the S&P earnings estimates out there have some validity. The majority of those estimates actually have 2023 being higher than 2024, 2022 by 5%. Historically, going into a recession, we do not have rising rates, rising earnings. Once that news hit, you can just see the reversal in the S&P. You have your little gravestone up here. The precursor, 943, 944, news hits 945, and then that was a wrap. From there, we never looked back, and we just sold off. One really quick tip here. As you studied technical analysis in 2020, I would strongly suggest you study fundamental and macro analysis now. It's exactly what's going to lead the market. If you knew the significance of this and how it was tied to the S&P earnings, we actually went over it in a video we did Saturday that I'm going to link to the end of this with 4 trends for 2023. What I like about this is it's telling you what's going to happen, and it just makes a lot of sense. If you think about it from a manufacturing standpoint, if you're manufacturing less goods, you're obviously going to have less revenue. If you're going to have less revenue, you're going to have less earnings. It's not rocket science, but it's really important to just at least get the general grasp of the concept so that you know why things are happening. And that just led to some epic shorts for us today. You can see the break right here, comes down 945, breaks again, never looks back, starts curling. Apple, I did a whole piece on it, and it's also in the newsletter. If you don't get the newsletter, make sure that you do. It's a free newsletter. There's a link in the actual description, and you can follow along with us, and it comes out daily. There's tons of alerts in there. I went through this entire situation on why these are dropping and why they're probably going lower. But the question is, you look at that and go, okay, well, what do we do now? That's great. What do I do now? I don't know how this would hold on here. Now, usually when we sell down and have a sell-off like this, we see some kind of bounce. We see some kind of reversal. And if you just kind of look at this particular pattern, you can see it here. You can see it here where you gapped up the next day, gapping down, gaps up the next day. So I lightened my short position into it. Watch the lower low tomorrow and then go from there. I would not be in a huge hurry to see that rally, but all these stocks had one thing in common today. All these leaders wrestled with VWAP. Once they broke VWAP, volume weighted average price, that was it. If you're not using this on your charts right now, you have a significant hindrance. It shows you exactly how the institutions are positioning themselves. It's abundantly clear as you drill down into the time frame that we had a position on that could be extremely lucrative. One close over VWAP, second close reversal, breaks the lower low. That was it. It was very, very clear. This was something that we actually carried on over the weekend. Some people actually added to the position, and it did really nice today. But again, what do you do now? You start putting VWAP in your charts if you're not. So you can start watching what's going on and start using it as an indicator and a barometer for the appetite of that particular stock towards institutions at that particular time. Now, that kind of close where you're enveloping all of this is pretty bearish, but we could bounce. So there may be other names out there that look a lot worse. Tesla, to me, you just fell off a cliff. The deliveries did it. Now, this was another one that we were short. This is what I was looking for today. So one thing I would say to you, in this kind of environment, you need to have your head on a swivel and you need to be able to change your opinion fast. Whether you're right or wrong, don't get tied to anything, because that's really how you're going to suffer here. Ego is going to get in the way and you're going to say, it should be going down. And I'm just going to leave it on, right? You abandon your process. Right? And that's when we start running into problem. If you look at this 117.50 and we look at this island, we have an island reversal gap, which is beautiful. And then deliveries come out. Well, the market didn't like deliveries and we sliced through support. So right into this, when we touched support, we looked like we were going to bounce, but we didn't. And I was looking at actually reversing my short and doing a possible long here. And then it cracked. Then it was on. And this became a really easy trade if you did not have a position already in it. Just a 1 minute orb opening range breakout, breaks right there. This becomes your stop and you're in that trade for less than $1.80 of risk. You can see how it acted. Now, once it popped up a little bit over here, it got me for a little stock. I trimmed that position out. But what I'm getting at is, what do you do now with these? You're up so much in these shorts, right? What do you do now? Well, to me, I think in on this, I don't see how anyone could be bullish on this. I don't know what piece of economic data is going to come out or what's going to rally us in such a way. Fed minutes are tomorrow. I can't imagine that doing a lot for Tesla, but you just never know. But we do have a new closing low. Be on my radar for tomorrow if we make a lower low and go from there. I did reduce the short position substantially. Apple and Tesla, of all the names that traded today, they look the worst that are large cap. Coming in third is NVIDIA. And NVIDIA did not really take out that lower low like Apple and Tesla did, obviously, but that reversal never happened. And when we see that, and we are unable to have that kind of reversal or footing, and we start forming these bearish engulfings, you need to pay attention. Right to the 55-day moving average, couldn't get over 151. This provided a really good short opportunity for us. You can see the break, and then it was just straight down. We actually shorted off the 5-minute chart. So what we saw was, we saw the news that came out. We saw how the stock acted to the news, and then that was pretty much it. It was on. And then we were just able to capture this also with puts and with stock. What I like about this is it confirmed the entire way down. So on this 5-minute chart, you might want to consider putting in a 9 EMA on a 5-minute chart and just using it as a barometer. It's been working really well, probably for the past month and a half for me, quite frankly. And you can see when you broke here, that was it. And then you know that you want to look at the previous day's close, 2 days ago, right? Always look at these closes, see how you act, slice through it like butter. Same close was right around there. Threw it like butter, comes down, bounces. Got out of the majority of that trade right in here, and that was it. But it was a great trade. These are not over, and I want to be really clear about that. Just because I closed them doesn't mean I'm not going to look at them again for them to rally. My concern is that I dropped so much today that you might see some kind of relief rally tomorrow, and we could take a look at them from there. This is another one that we shorted it about higher than about $1.50 from here. Once we broke, that was it. You orbed to the downside, opening range breakout on a daily chart. Why is this significant? It's significant because we sliced the 200 SMA and then broke a lower low, confirming that break. What's important about this is that they are being investigated by Chinese federal regulators for some kind of financial wrongdoing in regards to selling product. You do not want to be on the wrong side of Chinese federal regulators. I don't know if anybody here remembers Luckin Coffee, but it didn't go too well. So I think that we could see this $28 fairly quickly. Again, make sure you watch this video that is at the end to just get over these 4 trends that I see developing. I walked through Rivian. I walked through why Apple and these stocks were going to drop today. I literally walked through exactly in great detail what happened today. I'm fortunate that it happened today. I don't have a crystal ball, but there are just certain similarities between now and 2002 that are glaring, and they're outlined in that video at the end of this. Now, start looking at these home builders. All of these home builders are setting up, and this is exactly what I'm saying. These little flags, and then we're breaking out, whether it's Len Air, whether it's Pulte Homes, Toll Brothers, They're all breaking out. These are notes from the newsletter. Now, the one sector that was up today was financials. And why is that important? A golden cross right here. And we held the golden cross. A matter of fact, if you get super technical with this chart, we held the golden cross. And since we crossed, we've never closed under that 200-day, which is exactly what's supposed to happen with those crosses. So I would not rule out financials at all here. And I would watch this really closely. It is possible for tech to get slaughtered and for other industry groups to go higher. So keep that in mind. Please comment on this video. I did more of a macro view today on what actually happened today and what we traded because of your comments. So the more comments I get about which way to go, the better it is. And again, you really want to watch this video at the end. I literally map out what I think are the 4 biggest trends for 2023. And then in that, I'm also reading 19 investment banking letter that I went through, putting their ideas together to come up with that thesis. That's it. If you're interested in joining Alpha Chasers, there is a link up here in the top right. Simply click the link. Everybody have a great evening. Happy New Year.